Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates at the earliest. In this video, we will be talking about 3 companies which have recently posted very strong results. Please watch this video to know more about them. Now the first stock on the list is Amal Limited, which is available at Rs 136.20 and the face value for it is 10. The symbol for it is AMAL. Now Amal is engaged in manufacturing and marketing of bulk chemicals such as sulfuric acid and oleum and also downstream products such as sulfur dioxide and sulfur trioxide. These bulk chemicals find applications in multiple industries such as dyes, fertilizers, personal care, petrochemical, pharmaceutical and textile. This Gujarat-based company is promoted by the NSE-listed chemical conglomerate Atul and has a manufacturing plant located at Ankleshwar with an installed capacity of 140 million tons per day. Now the company reported a healthy jump in top line to Rs 9.3 crores, operating profit more than doubled to Rs 4.6 crores as compared to Rs 2 crores during the first quarter of last year. Expansion in operating margin aided growth in bottom line, which moved higher to Rs 3 crores. Growth in top line and bottom line has been aided by a sharp jump in realizations. Prices of sulfuric acid has increased to Rs 10,000 per ton from Rs 4,000 per ton after the shutdown of Vedanta's copper smelter in Thoothukudi. Now if you were to look at it, the company has not really been an outperformer, and with a market capitalization of 128.37 crores, the stock is a borderline stock between a micro cap and a small cap. The company is available at a price to earnings ratio of 11.39, which is also much more cheaper when compared with the industry PE of 22.18. Now the second stock on the list is CCL Products India Limited, which is available at Rs 276.95 and the face value for it is 2. Now CCL Products is India's largest manufacturer and exporter of instant coffee. Now this reported a consolidated revenue of Rs 294 crores, a growth of 20% year on year. Net profit rose 46% to Rs 39 crores. Growth in top line was mainly driven by higher volumes but was partially offset by weakness in green coffee prices that declined 15 to 20%. Growth was driven by strong performance from Vietnam operations. Sales from its Vietnam plant jumped 10 to 12% in the quarter gone by, while consolidated operating profit growth was aided by richer product mix. As India capacity is working at nearly full utilization, CCL is looking to grow its customer base in Vietnam after commissioning of agglomeration capacity in the region. Vietnam's capacity of 10,000 megatons was running at 70% utilization in FY18 and provides significant scope for revenue and profitability growth. Back home, CCL's new 5,000 megatons freeze-dried coffee plant is being set up at Chittoor and is expected to commence operation by second half of FY19. The management has indicated net profit growth guidance of 10 to 20% in the current financial year, excluding the new plant capacity. The new Chittoor plant is a high margin business and will further aid profitability as volumes pick up. The third and the final stock on the list is GM Breweries Limited, which is available at Rs 703.80 and the face value for it is 10. The symbol for it is GMBREW. Now GM Breweries Limited is engaged in the manufacturing of alcoholic liquor. The company is engaged in the business of manufacturing and sales of country liquor and Indian-made foreign liquor. Now GM Breweries reported a 10% year-on-year growth in top line for Q1 FY19. It reported revenue and earnings before interest, tax, depreciation and amortization, which is EBITDA, of Rs 404 crores and Rs 34 crores in Q1 respectively. EBITDA jumped 119% as margin expanded on account of soft raw material prices. Prices of extra neutral alcohol and rectified spirit, the key raw material for GM Breweries, which constitutes around 10 to 11% of total revenue, declined more than 50% year on year. Profit after tax also came in higher at Rs 22 crores compared to Rs 10 crores in the corresponding quarter of last year. Now if you were to look at the 1 year chart, you would see that this company has not really faced much of a correction. The company is a small cap with a market capitalization of 1,286.37 crores. And the company is also available at very cheap price to earnings ratio of 15.16, which is much lower compared with the industry PE of 58.05. The book value of 159.36 translates into a slightly expensive price to book ratio of 4.42, and the dividend yield here is 0.43. The promoter holding, however, is a strong factor for this stock and stands at 74.43. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended only to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.